Hi, this is Alessio. Hope you're well. In this video, we're going to take a look at this very interesting chart here on the stock markets and also what this chart over here of dumb money sentiment. In other words, what is the dumb money out there? What is the herd out there thinking about the major stock markets now that we've reached an important extreme in sentiment? In fact, what does history say about what could happen next to the major stock markets? Is it bad? Is it good? We're going to talk about it in this particular video. All right, guys, join me. Alright guys, welcome back. So in a few minutes, I want to take a look at this chart and I want to show you why I think we are at an important juncture, a very important position right now in regards to stock markets and what this chart is telling us in regards dumb money sentiment. This is a very important chart and I want to explain to you what history tells us about what this dumb money sentiment is telling us right now. Before we go on to that though, let me just give you some context. If you've been watching our videos and also our member videos, you'll know that I've been bullish on the stock market pretty much since the beginning of this year. So really from January onwards and even in the spring of this year, in March, April, I've been bullish and I've been calling for higher prices, particularly, for example, the level that we reached recently in the last few months at 4457. And even back in June, I was calling for this level also potentially be tested. Here's a quick video clip. We'll come back.
I think we completed wave 1, wave 2, and now we are in the wave 3, taking us at least, at a minimum, to 4457.
I think as long as the S&P stays above 4337, there's still a potential for that higher high to take the 4457 level out, or maybe even 4,500, 4,522. All right, guys, welcome back. Now you can see as the market has rallied higher and higher, notice that we're actually seeing divergences in the price. Notice if we just zoom in here a little bit, you will see as the market rallied up to this trend line, making a higher high, notice the MACD is making a lower high slightly, or about, I would say, flat MACD or slight lower high here, bringing about a divergence. That is a slight negative divergence here on the daily chart of the S&P, which means what? Which means the force of this uptrend is now beginning to weaken, and it means the risk of a potential pullback, a retracement, or indeed some kind of a correction is now increasing quite significantly. And in fact, let me show you this. This is a chart. This is the chart of dumb money sentiment. Now, I like to look at this every now and then, but only when it gets to an extreme level. For example, when the dumb money sentiment goes above the 100 region. Notice that it did that just recently. As you can see here, this is the 100 region, this blue line here on the chart. And notice the dumb money sentiment just went over the extreme 100 reading, as you can see here. Now, look at the last time this happened. But the main thing to understand about this is that whenever you see an extreme in sentiment reading, like we're seeing right now, it means there's a lot of positive, optimistic sentiment out there, extreme optimism right now in the market. By the way, the complete opposite of what we had at the start of this year. Okay, again, at the start of this year, absolute pessimism. Again, many people out there were calling for a crash, and even here back in the spring. So that's why it's a good idea to be a contrarian. So when people are becoming extremely pessimistic, like they were here and here, calling for a crash, extreme pessimism, it's a good idea to be a contrarian and looking at the opposite direction, looking at the opposite side. And similarly, right now, notice that right now the exact opposite is happening. We're not seeing pessimism or negativity. We're actually seeing a lot of over-optimism and indeed extremes in greed and positive sentiment, which means what? Which means danger for the market, potential risk coming ahead. By the way, so basically what's happening right now is a lot of investors are partying and dancing in the markets, a bit like that dancing party in that film, the Persian film, Layla's Brothers. I don't know if you've seen this film, but it has by far the most bizarre and hilarious dancing sequence I've ever seen in a film. Anyway, look at this over here. Notice that the last time the dumb money sentiment was at such an extreme over 100 was when? That was back in November, in the winter or November, December of 2021. And before that was in May of 2021. So the previous two occasions when the sentiment reading was this high over 100, again, dumb money sentiment, was back, again, the previous times were in November, December of 2021, and yes, May of 2021. And look at this. This is what happened when that occurred. So let's look at May 2021. You'll see it here. Okay, this is May of 2021, and when the sentiment became extreme, notice we had a pretty, well, not a very significant correction, but nonetheless almost a 3% drop in the market, as you can see here, back in May of 2021. And if you look over here, this is November and December of 2021. In November, when we had the extreme in sentiment reading that I just showed you a few minutes ago, look at this. a 3%, almost 3% drop in the stock market here. And even worse occurred in December of that year. Pretty significant drop in December of 2021, just a month after the extreme in sentiment reading that we just saw. By the way, let me just say this. I'm not expecting a big crash in the stock market. So even though the sentiment reading is pretty high, and yes, it does show that risk is increasing for the market, downside risk is increasing, let me just say that I'm not expecting a big major crash like the one we had last year in 2022. No, I think that's a lower probability, not impossible, but a lower probability. So really, all I'm looking for, again, given the extreme in sentiment reading that I'm seeing right now on this chart, I think the odds are for at least a 3% minimum pullback. So that's what I'm looking for. I think a 3% minimum pullback or about that is quite probable, quite likely. And again, I think that will likely start once the market breaks near support. And by the way, watch my Sunday member video where I discussed where the support levels are located. So I think given everything that's happening here in this chart, again, the extreme in sentiment reading that we're seeing here with dumb money just being ecstatic and dancing away, and yes, given the fact that we're getting near resistance levels at this trend line, as you can see, trend line resistance, and given the fact that we reached the 78.6% retracement, as you can see, we reached the 78.6% Fibonacci retracement of the entire decline of last year. Okay, that was 4534, and the divergences that I just talked about. So we have a slight negative divergence here on the daily chart of the S&P. I think the odds and the risk is increasing for some kind of a multi-week pullback or correction in the market. So that's what I'm seeing as the more likely scenario for the next several weeks, potentially the next month or so. So in summary, I think what this chart, the stock market, is warning us about is hubris. Again, a lot of over bullish sentiment in the market, like it was back in November, December of 2021 and in May of 2021. And it's warning us that the risk is increasing for some kind of a multi-week correction or pullback or retracement, whatever you want to call it, in the stock market. Again, once we break the near support levels. But let me just finish with this. Even though I'm expecting a pullback or correction in the stock markets, my long-term path, my long-term expectation for the stock market is still bullish. So I'm still long-term bullish for the stock market for the remainder of this year, going towards the end of this year, probably going to the beginning of next year. So I'm remaining long-term bullish, but in the short term, in the next few weeks, probably the next month or so, I'm expecting a correction or pullback or retracement. All right, guys, hope this video helps. Make sure you also watch the members video from Sunday, where we went into the markets in much more detail. So we covered the stock markets and Bitcoin and gold in a lot more detail. So go ahead and watch that. If you're not a member, you can join on that link you see right there. Thanks very much indeed. Bye for now.